Hello everyone. Today's webinar organized by Sustainability Reporting Standards Board of ICI. Jointly, we are organizing with the SAFA. SAFA is the South Asian Federation of Accountants, a network partner of IFAC, comprising of 11 accounting bodies in South Asian region, namely India, Pakistan, Bangladesh, Sri Lanka, Nepal, Maldives, Afghanistan, Bhutan, where there is no body exists, has been given as an observer status. So today's webinar is focused on in navigating sustainability, insights and best practices for sustainability reporting in business. So we would like to welcome our chairperson, CA Siripriya Kumarji, for this webinar, and we would like to welcome her. CA Siripriya Kumarji is a Central Council member of ICI and the chairperson of the Sustainability Reporting Standards Board and the director of the Institute of Social Auditors of India. She is also the vice chair of Corporate Laws and Corporate Governance Committee and Professional Skills Enrichment Committee of ICI. She is having a wide experience in insolvency practice and leads the corporate restructuring and insolvency practices across the country. He is also a regular faculty in training programs of ICI and delivered over 300 lectures. So we would like to welcome ma'am and over to ma'am for a welcome address. Thank you.
Thank you very much. And on behalf of the Sustainability Committee of the South Asian Federation of Accountants and on behalf of the Sustainability Reporting Standards Board, the SRSB of ICI, I, along with my Vice Chairman, CA Dr. Anuj Goyal, extend a very, very warm and a very, very hearty welcome to all of you to this SAFA level webinar on navigating sustainability, insights and best practices for sustainability reporting for businesses. So I'd like to take this opportunity to welcome each one of you, the Vice President of SAFA, Mr. Ashfaq Yusuf Tola, Mr. Heshana Kurupu, the President SAFA, our own President, C.A. Ranjit Kumar Agarwal, from ICI, who's a bit busy with another meeting. We have with us Dr. C.A. Charanjot Singh Nanda, the Vice President and the incoming President of ICI for the next year, with us here today. And in terms of a very short introduction to this program, climate reporting and sustainability is the biggest theme that's dominating country level and boardroom conversations. In this context, I think there are three distinct aspects that we focus on in these SAFA level webinars. One is reporting information. What kind of frameworks are getting used by the various countries of the world and as prescribed by the various regulators. In that context, India has a very unique reporting framework, which is called as the BRSR, which is mandated for the 1,000 listed companies to mandatorily report on environment, social and governance parameters. In our very recent SAFA meeting that we had concluded, we understand that Sri Lanka is also in a fairly advanced state of understanding their requirements of reporting, and so is Pakistan, while other countries are kind of coming up with their own protocols for reporting. So one aspect that we focus on is a lot of emphasis on preparers. How do we support preparers on sustainability information? The second is on assurance. Of course, you're all aware that there is a worldwide reporting requirement, which is SSAE 3000 and SSAE 3410 in the context of specifically the GHG emissions. Now, additionally, IAASB is also working on an overarching standard, which is the ISSAE 5000 for all kinds of sustainability assurance, and we'll get to hear more on this space in our future webinars. The third is, of course, the most important component, which I think is going to be in the context of MSMEs. MSMEs and sustainability reporting. There was a very nice paper by the United Nations. It's called the UNDP, and it was called Project Savannah. It talks about three predominant themes. 80% of the world's emissions and sustainability related issues will actually come from the MSMEs. In that context, it will be very important for us to define what MSMEs will have to report, how they will report, and I'm sure technology platforms will start evolving on helping MSMEs to track and report their sustainability information in the E, the S, or the G space. And the third element is, why should an MSME do it at all? What are the risks? And more importantly, what are the opportunities? What are the opportunities that will emerge for MSMEs who are ahead of the curve? Whether it is in terms of reporting, or it's in a greater aspect of compliance, will their access to markets become easier, especially in the context of the carbon border adjustment mechanisms, etc., which are evolving? And secondly, would their access to green finance also be easier? So we'll explore all these themes in the coming weeks and coming months. But here's once again a very, very hearty welcome to all of you to this webinar, and it's over to the coordinator. I'm also going to place on record my sincere thanks to the event enablers today, which is CA Neeraj Mittal, CA Siddharth Jain, CA Ashish Sachdev, for being here today to help us with this program. And my thanks are also in order to the Secretary of the Committee, and she's assisted by Dr. Chindu Chandran, and the Secretary of the Committee is CA Shweta Goel, who's here with us today.
Thank you, ma'am. Thanks for such a warm welcome. Now we would like to request CA Neeraj Mittal to introduce our Vice President SAFA. Over to Neeraj, sir.
Good afternoon, everyone.
Thank you very much. Am I audible?
Yes, sir, you are. Please go ahead.
Thank you very much because I'm out of queue. Since I have a flight to catch to Karachi, I'm in Islamabad right now. My welcome to Madam Supriya Kumar, and then my own president, Mr. Asena Krupo, Agarwal ji, my brother C.S. Nanda, Goyal Saab, and then Shabir Ahmed Saab, Jha Saab, and then Prakash Gupta Saab. I think this is a very important topic, and sustainability is nowadays the talk of the town. And considering that the importance of sustainability, the SAFA board has given a special impetus to the sustainability seminar. And I think this region requires more impetus and more, attention, because the vulnerability of weather is really very much there for the climatic changes in Pakistan especially, and in this entire region. We can see the recent havoc wreck in the UAE because of the climatic change. We have seen so many signs of such climatic changes and catastrophic changes on floods in Pakistan last year. So we are actually the victim of climate change, and sustainability is need of the hour for this region. Considering that the SAFA board will extend full cooperation to all its member body to just promote this sustainability concept and reporting in the region. More so, the focus of SAFA board this year is to just identify 2 goals each for each committee, and let's focus on short, long, and medium term goals. Considering that, we are also doing some important work on economy as well, because what difference do we make in the common life of a common man in the region? And this is very important. Considering the fact that this region is by far one of the best economic prospects in the entire Asia as far as this Asian Development Board is concerned, the growth rate of is one of the highest in entire Asia. So we have to make, and the poverty level is also very high. So we have to mitigate that, and we have to make a difference in the life of the common man. I was just discussing in my foreign ministry about the exchange of common men and participation of professionals in each of the countries' webinars and seminars, in fact seminars, physical presence there. And they have assured me that they will give due importance to it. We have taken up this matter at SAFA Secretariat level, but unfortunately, since last 8 years, there was no meeting of the standing committee. We are trying to convince the people and secretaries, foreign secretaries of the entire region to approve the visa policy for at least SAFA through circulation. And I'm quite positive under the able leadership of my president, Mr. Hassana Kurupo, we'll be able to manage something. I think I'm getting late. I have to reach airport, and there's a distance of more than half an hour from my ICAP campus of Islamabad to the airport, and I have to just leave now. I wish you all the best and great success to this webinar. Thank you very much.
Thank you, sir. Thanks a lot for such an enriching words. Now we would request Neeraj Mittalji to introduce our President SAFA for a second. Yeah. Over to Neeraj, sir.
Good afternoon, everyone. Right now, I would like to invite Mr. Hassana Kurupo, President was SAFA. So before inviting sir, I would like to just introduce about sir. Hassana Kurupo sir leads both the Institute of Chartered Accountant of Sri Lanka and the South Asian Federation of Accountants, SAFA. He boasts over 24 years of experience holding key financial positions at KPMG, First Capital Group, MAS Holdings, and currently David Pace Group. Kurupo sir holds a BSc in accountancy and completed his MBA and Master of Finance in Financial Economics in Sri Lanka. He is known for his contribution to transparency and governance in the accounting profession. Thank you, sir, and over to Hassana Kurupo, sir. Sir, please.
Thank you. I think Ms. Ashfaq Tola left the meeting. On behalf of SAFA, I would like to welcome all of you. Mr. Nandaji, Vice President ICAI, Ms. Thiripriya Kumar, Committee Chairman, and alternate chair, Mr. Dr. Anuj Goel, and all the other panelists and speakers. I think it's a great initiative by Sustainability Committee because yesterday we saw Accounting Standard Committee coming up with a webinar series to educate our member fraternity in the SAFA region, SAARC region, and today back to back we see Sustainability Committee coming up with their series. As I was made to understand, this is not going to be just one session, and you are planning to have a series of sessions to share this knowledge. And the beauty of it is it's not just one country coming up with their views. I think you are getting all the member bodies to share their views, and that collective stimulation definitely create more knowledge and enhance our standing as a profession. As Mr. Tola also mentioned, I think this is in the growth phase led by India. So hence the reason I think we need to focus more on sustainability and related aspects, because with the growth, sometimes you compromise on the environment and related aspects. So in that sense, we have a great role to play. And it is not limited to sustainability reporting, as Mr. Priya mentioned. There is going to be assurance standard, and as well as there's going to be ethical standards. So there are 3 standards that are going to come already. Sustainability reporting standards S1, S2 launch, and there will be another 1 standard, as I heard very soon they will launch. Then assurance standard is coming up. Similarly, there was exposure draft release on ethical standards and updates on education standards. So this framework and ecosystem is coming together, and sustainability is here to stay, and we have to get ourselves adjusted. It is not only reporting. I think it may create opportunities for members as well, because those who are willing to shift their careers into some of these areas, there are great opportunities coming up, either in reporting, assurance, or any other area. So that's another positive I see, because this space is now mostly owned by accounting and professional accountant at this moment. So I think we need to continue that same momentum and educate our members, show them the opportunities available, and support the each country's national growth. So with that, I again congratulate the committee for coming up with this idea, and looking forward to have more series of sessions in months to come. Thank you very much.
Thank you, sir. Thanks a lot. Now I would request CA Siddharth Jainji to introduce our Vice President ICAI.
Hello everyone. Good morning. Good afternoon to everyone. As actually Nanda sir made no introduction, all the chartered accountants of India and other countries know him very well from his impression in the CA Institute. But still, as a formal introduction, I would like to introduce our Vice President of ICI, CA Charanjot Nanda sir. So Charanjot Singh Nanda sir has been appointed the Vice President of ICI for the term of 2024-25. He has been a practicing CA since last 33 years. He has been a scholar and in the merit list of the Kurukshetra University throughout his undergraduation. He has also secured 35th rank in his CA Inter. And before becoming the Vice President, he has also served as a Central Council of ICI for a consecutive 6 terms, starting from 2004. He was also the chairman of NIRC for the terms of 2002 and 3. And this is the basic introduction. Apart from this, he is also a chairman of Internal Audit Standard Board. So he has made a significant contribution in the ICI while promoting the ideas and dialogue between the ICI and chartered accountants in the industry, while being served as the chairman of committee of members of industry. Apart from this, his interest in the women member empowerment committee. He was also the chairman of the women members empowerment committee. So his main aim was to empower the women in the CA profession as so that they are not suppressed by the male members or they get the equal opportunities. He is also very active in delivering the motivational lectures, which he is actually famous for. He always delivers some motivation amongst the young members and also try to motivate with his quotes and with his stories and in a very familiar language that everybody can understand. Charan sir is also a chairman of South Asian Federation of also served as the chairman of the South Asian Federation Accountants SAFA Committee on IT, Information Technology. So sir has he has represented ICI on various platforms like Association of Certified Fraud Examiners, ACFE, and IIA, Institute of Internal Auditors. So apart from this also, he has nomination has been filed. His nomination for ASSOCHAM, Associate Chambers of Commerce Industry of India, and on capital markets. He has also been ICA representative on Regional Direct Tax Advisory Committee under the CBDT at New Delhi. So this is the introduction, the technical introduction of sir. Apart from this, I would like to also say that sir is very available and a motivational type of speaker. Apart from the curricular or the CA profession, in the general life also sir tries always on social media or on every seminar or tries to only motivate and ignite the growth or burning desire in the new members or someone who is struggling or in need some motivation. So I would like to thank you, sir, Nanda sir, for being in the ICI and serving the profession so beautifully. So this is from my side. We welcome you, sir, in this webinar and would like you to say some few words. Thank you.
A very good afternoon, ladies and gentlemen. Mr. Heshana Kurupu, President SAFA, Madam Sri Priya Kumar, Chairman SRSB, CA Dr. Anuj Goyal, Vice Chairman SRSB, the learned speakers of the day, Mr. Shabir Ahmed, CA Praveen Kumar Jha, CA Prakhar Gupta, Secretary to the Board, CA Shweta Goyal, CA Neeraj Mittal ji, CA Siddharth Jain ji, CA Ashish Sadev ji, and more importantly, members who have come here to go home more enlightened on a very interesting topic of sustainability. Today, I am honored to address you on a topic that holds immense significance for the future of our planet and our business, which is sustainability reporting. Sustainability reporting is not just a regulatory requirement or a corporate obligation. It's a powerful tool for driving positive change and creating shared value amidst challenges like climate change, social inequality, and environmental degradation. At its core, sustainability reporting acknowledges businesses' responsibility to society and the environment, showcasing commitment through reporting ESG performance. I would like to touch upon a few insights in sustainability reporting, like the first, importance of conducting a material accessibility. The material assessment identifies the sustainability issues that are most relevant to the business and its stakeholders, speaking largely on priorities. Stakeholder engagement is key to ensuring the credibility and relevance of sustainability reporting. Going ahead, sustainability reporting is most effective when it is integrated into the overall business strategy, thereby creating transparency and disclosure, which are the fundamental principles of sustainability reporting. Continuing improvement is also essential in sustainability reporting. In the context of India, the regulatory framework for sustainability reporting is undergoing transformative evolution. Chartered accountants play a crucial role in ensuring compliances with these regulations. This webinar will equip you all with the knowledge to effectively guide companies in navigating the evolving regulatory framework. I implore each of you to explore the resources offered by the Institute of Chartered Accountants of India and, more importantly, the Sustainability Reporting Standard Boards under the chairmanship of Madam Sri Birya Kumar and vice chairmanship of Dr. Anuj Goyal, who have been working incessantly to ensure that we give best of the services and reporting patterns to our members. Today, let's promote reporting business practices by empowering CAs to guide companies in implementing effective and impactful sustainability reporting. Before I end, I would like to give you some additional best practices, specially tailored for sustainability reporting in business. The first is executive leadership and board oversight. Very importantly, the commitment of bringing sustainability into the organization and encourage comprehensive reporting is very important. The second is integration into business strategy, because when it comes as a single window, things become more easier. Materiality and stakeholder engagement. Materiality is very important. A rigorous materiality assessment is important to determine the facets in which sustainability has to be implemented. Data correction and verification, very, very important. A total impasse of data and how it could add value to the entire reporting perspectives become important. Tailored reporting framework, very customized reporting framework, so that people are able to effectively draw inference from whatever you report. Clear communication and narrative to bring things into the right perspective. And to end, it is consistency and comparability coupled with transparency and disclosure that would ultimately drive home the benefit and, the most importantly, the use of sustainability for the general public at large. I am so happy that this program has been conducted on the forum of SAFA. I compliment this webinar great success. Thank you. Thanks for inviting me.
Thank you, sir. Thank you, Honorable Vice President, sir, for his enlightening words. Now, moving on, we would like to request Siddharth Jain ji to introduce our, CA Ashish Sachdeva ji to introduce our Chairman Anuj Goyal ji. Over to Ashish, sir.
Hello and good afternoon to all of you, all the esteemed members present over there. Before we hear Anuj sir, here's a brief profile about him. CA Dr. Anuj Goyal ji is the Central Council member of ICAI and Vice Chairman of the Sustainability Reporting Standards Board. That is a very important board, as sir has already mentioned. He also serves as the Chairman of the Ethical Standards Board, the Professional Skills Enrichment Committee, and the Publication and CDS Directorate. He has also served as the chairman of the Ghaziabad chapter of the ICSI and ICNA. with an extraordinary tenure of 17 years in the Central Council, 3 years in the Regional Council, and 6 years in the branch, including chairman of the CIRC and various ICAI central committees, member of the editorial board, and more. Sir has made significant contributions to the profession with vast experience exceeding 40 years and a wealth of knowledge. His contribution in the field of research and development have always been remarkable. He's a well-known speaker on various topics. Sorry, and also serves as a visiting faculty member at various institutions. Additionally, he has worked as editor-in-chief and editor of various publications of professional interest. We are honored to have you, sir. Over to you, sir. Thank you.
Thank you very much, Ashish Sachdeva ji, our honorable member of the Institute of Chartered Accountants of India. We are having the presence of our honorable Vice President, C. Charanjot Singh Nanda sir, and of course we are having the presence of the President SAFA from Sri Lanka, Hasana Karupu sir, and we are having our dynamic chairperson of this very, very important sustainability reporting standard board of ICAI, CA Sripriya Kumar ma'am, and I welcome our honorable resource persons. We are having Sabir Ahmed ji, council member, Institute of Chartered Accountants of Bangladesh. We are having the presence of Vice President, ICAN, Institute of Chartered Accountants of Nepal, C. Praveen Kumar Jha ji as a resource person. And from CA India, we are having CA Prakhar Gupta ji as the resource person. We are having very, very prominent event enablers from the pink city of the country, Jaipur, CA Ashish Sachdeva sir. And from Gurugram, we are having CA Siddharth Jain ji and CA Neeraj Mittal ji, and all the respected members who are present here, not only from India, but not only from SAFA countries, but from each and every part of the world. Very, very good afternoon. I'm really very happy that we are having this webinar on navigating sustainability, insights and best practices for sustainability reporting in business. And as Vice Chairperson of the Sustainability Reporting Standard Board of the Institute of Chartered Accountants of India, I see Dr. Anuj Goyal extend a very, I'm really very happy that SAFA and ICAI SRSB has taken this very, very important initiative. And we will certainly see that how we can have more and more such virtual programs and webinars in the times to come also. And friends, as you are aware that in today's time, it is very, very important for businesses to make sustainability a normal part of everything they do. I think financial considerations are less and sustainability considerations are more nowadays. Sustainability reporting is a great way for companies to openly tell stakeholders how they are doing on the environment, social issues, and how they have governed. By using reporting frameworks, businesses can be more responsible, build trust, and find new ways to be innovative and successful. I'm quite hopeful, I'm quite confident that this webinar will serve as a pivotal platform for us to delve into the insights and best practices that can guide us towards a more sustainable future. I am really grateful to all our honorable leaders. Of course, SAFA President Hasana Karupu ji, our honorable Vice President of the Institute of Chartered Accountants of India, CJS Nanda sir, our honorable Chairperson of the Sustainability Reporting Standard Board from India, CA Sripriya Kumar ma'am, and all the guest speakers, Sabir Ahmed ji, Praveen Jha ji, Prakhar Gupta ji, and the event enablers, Ashish Sachdeva ji, Neeraj Mittal ji, and Siddharth Jain ji, and of course all the delegates from each and every part of the world. And we are really grateful to our team ICAI, team SRSB, Sweta Goyal ji, our secretary, Dr. Chindu Chandan ji, and CA Manish Goyalji and CA Puneet Mittalji. And thank you all for your dedication to sustainability. I am excited about the discussions and insights we'll share during this webinar. Thank you very much, friends.
Thank you, sir. Thanks for addressing in the webinar. Now we would moving on to the next session. Now we would like to welcome Ashish Sachdeva ji to introduce our speaker Shabir Ahmed ji.
Thank you, madam, and thank you, Anuj sir. Shabir Ahmed sir, FCA, is a seasoned professional who serves as a council member of ICAB and vice president for the year 2020. He has chaired SAFA's Committee on Professional Ethics and Independence and contributes to CAPA Audit Group. Currently, he leads several committees at ICAB and is a partner at Oda Vasi Chaudhary and Company, formerly AF Ferguson and Company, with over 25 years of experience. His international tenure with KPMG across multiple countries enriches his expertise. Shabir sir provides audit assurance and advisory services to prestigious global firms and advises development partners like ADB and World Bank. We are here to listen to you on sustainability, sir. Welcome you. Over to you. Thank you.
Thank you, Ashish. I hope I'm audible.
Yes, sir.
Oh, wonderful. Thank you. I'm humbled by the long introduction that you have made, Ashish. So I hope I will live up to the high expectation and hype you created. First of all, my sincere appreciation to Institute of Chartered Accountants of India for organizing this webinar in conjunction with SAFA. I think it's very heartening to see the collaboration through the SAFA framework, where a number of issues which are very topical issue for our professional accountants are being discussed and deliberated. Knowledge sharing happens, and in this manner, especially ICI is taking quite a pivotal role. So sustainability is one area where things are still emerging. If we compare IFRS or international accounting standards compared to sustainability, international accounting standards have been in place for last 25 to 30 years, and still it is evolving. Whereas sustainability reporting or ESG reporting was in various forms for last few years, but it really got the traction or momentum once IFRS Foundation has established ISSB, International Sustainability Standards Board, and last year, June, when ISSB issued S1 and S2. The other momentum that is also taking place is in relation to the assurance engagement relating to sustainability reporting. As we all know, ISSA 5000 has been published in the form of exposure draft. Now, just let me, somehow the my camera is not working, so I can't, let me just fix my view, speaker view, gallery view. Yeah, okay. So I think what I would do in next 10 odd minutes, so I will share experience from Bangladesh perspective, how we are going, how we are progressing, which are the hiccups that we are facing so far. When we talk about sustainability reporting, one thing that quite often come into discussion is the term greenwashing. Like window dressing in financial reporting aspect, the greenwashing is also an area which quite often is spoken when we talk about sustainability reporting or ESG reporting. The reason why perhaps is there were a number of framework through which you can do sustainability reporting. Especially in our part of the world, before S1, S2 came in, GRI was quite prominent. A number of entities has used a GRI framework for their sustainability reporting, especially in Bangladesh. The local central bank, that is Bangladesh Bank, back in 2012 issued a guideline on sustainability reporting, whereas in the form of green financing, the banks were encouraged to provide financing to those industries which are working towards energy efficient uses of machineries or utility. So during that period, a number of banks and the other organizations also adopted, they didn't call it sustainability reporting, they called it ESG reporting. So encompassing the other elements as well. So most of them followed GRI framework. Then last year, December, the central bank, our Bangladesh bank, has issued a detailed guideline for the banks to follow on the sustainability reporting, with the first reporting due in June, based on 30th June 2024 half yearly. The banks shall require to submit to the central bank certain data and information on their sustainability reporting. One of the practical challenges that I faced as a practicing accountant, as well as a chair of the sustainability reporting board of Institute of Chartered Accountants Bangladesh, is the factor of proportionality. You know, like the cost of whole-scale implementation of sustainability reporting, whether that actually reflected in the intended benefit. Because if you look at S1 and S2, it has a multiple layer of data capturing requirement, especially scope 3 data capture. It proven to be quite difficult in Bangladesh context, and I'm sure it will be equally applicable to most of the South Asian countries as well. Because more Bangladesh, or for that sake, South Asia is predominantly driven by SMEs, and most of the SMEs are still in their record keeping is semi-formal. I wouldn't say informal, but it's a semi-formal. They are not yet used to full scale, ERP or some other automated solution where their record keeping is robust. You can get all the necessary information. So whenever there is a requirement to capture scope 3 emission disclosure or environmental footprint, we are facing quite a bit of challenge. Another area where I think it is relevant to speak here, and again, it's very much unique to South Asia, I would say, not only Bangladesh, is RMG, or ready-made garments, is one of the predominant industry in this part of the region. For Bangladesh, it's the major source of export, contributing nearly, I think, 70% of the export, and like more than 50% of the economic activities are directly or indirectly related to RMG or textile. Now, all we know, the European Union has endorsed the extended customer due diligence. And as part of that, the major RMG sourcer from the European Union, the big brands, they are now implementing this extended due diligence on supplier, where by virtue of that, all the local garments industry are required to comply with those additional due diligence requirement. And that's where we are facing the challenges that the garments itself perhaps able to capture their greenhouse gas emission, their sustainability footprint. But when it required to go down the value chain, that's where the data collection became quite a bit of problem. Another area we are still trying to work on is availability of the resources. A number of cases, the data capture required a number of data analysis to identify various greenhouse gas emission, as well as your utility, the source of utility. Sometimes, I don't know about India or Sri Lanka, Pakistan, other country. Like in Bangladesh, obviously, there are a mix of power generation. We have a coal-based power plant, we have gas-based, we have some wind power and hydroelectric power as well. But when the utility bills are coming, there is no mention of the actual sources. So how you will identify, which are clean energy, which are dirty energy. So that is another area I think we need to work on, and we can gather experience and knowledge from each other, especially India being the largest economy of this region. On a number of matters, I think they are a bit ahead of the pack. So perhaps later on, when someone from ICI will speak, if they can also share on these aspects. So I have talked about greenwashing. I have spoken about the proportionality. That is very important. One size will not fit for all. And that, therefore, actually, for Bangladesh, only for banks and financial institutions, the central bank being the primary regulator has issued sustainability reporting requirements. For the other entities, nothing has been issued yet. Perhaps many of you know, in Bangladesh, there is a new regulatory setup. It's called Financial Reporting Council, which is now entrusted with adoption of accounting and reporting standards. Previously, it was the domain of Institute of Chartered Accountants of Bangladesh, but now it has been taken over by a super regulatory body called Financial Reporting Council. So we had actually a webinar last week where we invited, on behalf of Institute of Chartered Accountants Bangladesh, we invited the chairman of Financial Reporting Council Bangladesh. So during that meeting, he said, we have not yet formally adopted S1, S2. So he said that in the next council meeting that were scheduled to take place in early June, S1 and S2 will be adopted, and then they will do some sort of stakeholder engagement to find out how best they can, go for the implementation. Because we suggested phased implementation, so that, for example, bank and NBFI is already under this reporting framework by virtue of central bank's guideline. Next stage could be the listed company. We don't have many listed companies. In fact, there are only 350 or 400 listed companies with 2 stock exchanges of Bangladesh. So it will be very easier to bring those 400 companies under the regulatory, under the reporting framework. Then perhaps the large corporates having a certain threshold of revenue or total assets that FRC is working on, and they are also soliciting some guidance from ICAB that we are working on, how we can identify the large corporates first for the non-listed entities, and then gradually go for the phased implementation. Incidentally, I was in Singapore a couple of weeks back where I attended an IFAC sustainability exchange where a number of people from high-ups from IFAC as well as ISSB came, as well as some of the local regulator. Especially during that meeting, representative from ARCA was there, the Singapore Financial Reporting Regulatory Body. So she mentioned actually Singapore has taken some proactive measure in terms of the robust implementation of sustainability. One of that is giving some sort of grant to the companies. As we say, when talking about the proportionality, especially a first-time implementation will be quite costly. And many of these entities, which are smaller entities, may not have in-house resources. So they need to get outside help, especially someone like a professional accountant, chartered accountant, for example, as my very respected Nandaji has mentioned at the beginning, your vice president, that a professional accountant like chartered accountant could be a very good resources for the companies as a hand-holding role, advising them on the implementation. So that will require some additional costs. So I think from ARCA or some other sources, the Singapore authority is providing the one-time grant for the companies to implement sustainability reporting. So similar something we can think of, especially, most of the countries in this region are least developing countries, and hence we work closely with multilateral donor funds like World Bank, JICA, Asian Development Bank, USAID, all these. So since here the SAFA president is here, SAFA leadership is here, I think they can also talk with all these multilateral development partner donor agencies to see how we can get some sort of implementation support. I know IFC, which is a business arm of World Bank, is assisting our central bank in implementation support. They have conducted Train the Trainer program for a number of central bank officials in Bangladesh and Nepal. So similar, I think this is from SAFA, we can explore these opportunities so that we want to implement in a proper manner. Because if the first time implementation is not correct, then that will create severe ripple effect later on. So that's why rather than just implementing it for the sake of implementation, we believe that if the proper implementation is done, even if it's a gradual manner, even if it's delayed slightly, there is no harm, but it should be properly implemented. I think, yeah, I have perhaps spoken about all the things that I noted. I should talk about capacity building, greenwashing, proportionality, ecosystem definition. Another area perhaps is also required is IT infrastructure. Because at the moment, again, when I said a lot of companies in this region or business entities are SME, where their IT framework is not yet very robust, is they still use very off-the-shelf products like Tally software or some very basic accounting software. But in order to have a robust sustainability reporting, they need a quite sophisticated ERP system to capture those data. So this will be another investment, I think, where we need to talk about. Last thing I would want to touch base here is the ethical aspect. We professional accountants, whether it's a chartered accountant, whether it's a cost management accountant, we operate under a number of regulatory or ethical framework. For example, all the institutes of SAFA, they have their own bylaws, which all the members, regardless whether they are in practice or in business, need to follow. In addition, we as a professional accountant also need to comply with NOCLAR provision under IESBA Code of Ethics. However, in sustainability reporting, you would see whether it's a reporting aspect or assurance aspect, a lot of non-professional accountants are also involved. And for right reason, perhaps a number of those things require technical expertise that goes beyond the core competency of a professional accountant. So when we will involve those sort of non-accounted professionals in either assurance framework or reporting framework, they also need to brought under certain type of ethical standards. So how we can bring them, this is an area perhaps we need to work as a regional body, SAFA, and talk with each other how best we can do. Because, for example, if an environmental engineer or a scientist you need for this engagement, he might not need to abide by the bylaws of our institute or code of ethics by IFAC or IESBA. So how we can ensure that that person who is working under our engagement team is also complying with those requirements. This is an area perhaps also need to look at. So I am conscious of time. I think I was allocated 15 or 20 minutes, whatever. So I will take a pause here. I know we have very other distinguished speakers. I will hang on to it. Later on, I think there is a question and answer session as well. So if there are any other issues, any discussion point, I would be happy to chip in. So I will take a pause here. I will hand the microphone back to whoever is moderating this session. Thank you.
Thank you so much, sir, for your insightful knowledge and the passion that you have shown us for the sustainability reporting and what is happening all around the world and what is important in this era, whatever is going in the sustainability reporting domain. Now, I would like to invite CA Siddharjan, sir, if you can introduce CA Praveen Kumar Jha, the Vice President of ICA Nepal.
Hello. So now I would like to introduce CA Praveen Kumar Jha for the upcoming. CA Praveen Kumar Jha is the Vice President for the term of 2023 and 24 of the Institute of Chartered Accountants of Nepal. Certainly, chairing the Sustainability Reporting Committee and serving on various other committees, including SAFA's Committee on Sustainability Reporting and Assurance. He demonstrates a strong commitment to professional development. Additionally, as a board member of the SEBI Security Exchange Board of Nepal and a member of the Audit and Compliance Committee of the All Nepal Football Association. His expertise spans accounting, auditing, taxation, and advisory services. Notably, His diverse portfolio includes audits of hydropower companies, banks, hotels, and international development projects, highlighting his broad skill set and extensive industry knowledge. So I would like to welcome CA Praveen Kumar Jha. Thank you. CA.
Oh, yeah. Thank you, Siddharthji. Namaskar. Namaskar to everybody who is here. This is Praveen as Savir Saab. Good afternoon. I hope everybody's here. So, President SAFA, Vice President SAFA, President of ICA, Vice President of ICA, Dr. Nanda, and everybody who's here, including Cipriya-ji. Namaskar to everyone. Basically, today, I'm gonna discuss or give you the perspective or context of Nepal, how and where we are. And in order to talk about sustainability reporting, sustainability best practices for sustainable reporting in businesses, we should firstly, I think we should discuss about the situation where our country Nepal is. As you know, Nepal's population, as you may know, Nepal's population is less than 30 million. So we are, apart from Maldives, we are on Bhutan. We are the smallest country which is represented today, 5. Out of the 5, we are the smallest countries in terms of in terms of number of people that we have, and we are our neighbors are the big neighbors of basically 18% each, or 36% of the entire world population is around us, or even more, 40%. CO2 emission wise, you see, our share of carbon footprint is 0.04% of the entire CO2 carbon that the world generates, only 0.04%. And Nepal's hydropower resources are like clean drinking water is 2.54% of the entire world. So basically what I'm trying to say is Nepal is not a polluter as such, but still we are one of the most, since we are, because of our economic capabilities, we are one of the mostly impacted countries in the whole world. So in this, considering this, what we have lately done is we started late. We only started our sustainability reporting journey or sustainability standard consideration journey. It's been quite late, but now we are in a situation where we are thinking about rolling out our own set of standards. Normally, we don't adopt IFRS as such, but we give it a local context, and most of the times we call it Nepal Financial Reporting Standards. So NFRS S1 and S2 is something that we are working on, and our status as of today is in progress. And then when we are talking about sustainability reporting standards, we have to mention the fact that it, as all of us know, and then there may be somebody who is just somebody who has just started to actually delve into it. It covers ESG reporting, as all of us know. And then ESG, out of this ESG, social and governance part is something that we have always been actually, there are regulations, local regulations in place as per different guidelines, just like in Bangladesh that Savir Saab just mentioned, that even our central bank has this ESRM, Environment and Social Regulation Risk Management Guideline, which is quite elaborate and which is based on basically GRI standards, which actually covers, which applies to the bank and financial institutions, and they cover most type of loans actually, and that there are thresholds defined, and there's also a negative list that bank and financial institutions cannot provide advances to. But these reports are standalone type reports, and then these are given to the central bank. These are reported to the central bank, and in the annual report that these financial banks and financial institutions issue, they just mention it as as a non-standard one paragraph thing, because as of now there's no mandatory reporting requirement that is actually rolled out in our country. And then Accounting Standard Board in Nepal is mandated by law to develop reporting standards, and that is promulgated by Institute of Chartered Accountants Nepal. So basically, the responsible person, and since we don't have a sustainability standard board as in India and in other places, it's the Accounting Standard Board which is given the mandate to actually work on this, and a Accounting Standard Board is actually working on these as a priority. And then environment, as I said, environment, social and governance. If we talk social and governance, as I said, there are regulations in place, and we are a country which is just been federal republic. It's been only 8 years, and in between this 8 years, there has been a couple of life-changing events like Corona, and then there was an earthquake. If you are aware of, there was a big earthquake here in Nepal. So because of that, the progress that we could have made has not been actually is not there. But as I mentioned in the beginning, our economy is only $50 billion economy, and then we are actually donor driven. We are dependent on donors for many things. As Sabi Saab just mentioned, the IFC and World Bank and ADB are there in our country, and their influence is more than what it should be in India and other places. So what happens is, because of this, our government and then economy is small. So basically, when we are talking about sustainability reporting standards, it's not only the ISSB standards S1 and S2. We also have to think about GRI, because government is our biggest business. Government's share of business in Nepal is huge. And so maybe it's not only since ISSB standard is particularly mainly for driven towards the investor, it's for the investors, whereas GRI standard is for multiple stakeholders other than the investors. But eventually, GRI impact would come here. That's my personal view. It's not the view of the Institute or Accounting Standard Board as of now. So, and then when we're talking about ESG reporting, we should also talk about the domains of sustainability reporting, which is governance, as Nanda Saab has elaborated, governance, strategy, risk management, metrics, and targets, etc. So governance is very important, and then processes, control, and procedure that the entity uses to monitor and manage sustainability, not only sustainability risk and reward, risks and opportunities, but also climate-related risk and responsibilities covered by S2. Strategy, there has to be a strategy, as you mentioned. Also, risk management, we need to identify, assess, prioritize, and monitor sustainability risks and opportunities, and climate risk and opportunity. And metrics and targets is something that we are focusing on. We're actually trying to align. When we have studied a lot lately, since it is our priority, and then we realize that there's a probability of duplicity in S1 and S2, and if the entities and the ones who are actually rolling it out have to duplicate, they have to work twice to be compliant with S1 and S2, then it would be difficult to roll it out, as it is expensive, and as have been mentioned by the previous speaker, it's expensive to roll it out, and there are resource constraints, and experts, you see, one who has really done it is in scarcity, so that constraint is there. So basically, resource constraint is something. Basically, there's duplicity is something that we need to be very careful about, that we actually have to consider while we decide how we'll like to go. Anyways, in our part of the world, in basically in Nepal, what happens is until there's a regulation in place, people don't tend to start thinking about it. So what we have decided is, like, we'll roll out the exposure draft sometime soon, and then exposure draft for S1 and S2 sometime soon, and then we'll give there'll be a period of voluntary compliance, which will actually allow us to actually assess the preparedness of the preparers, assess the quality of the resource persons or who are available, or the consultants who could do it, not only chartered accountants but also others. And then we'll also have, in the meantime, we'll have assurance standard coming up, and maybe we will have mechanism in place where we should be in a position to actually have the reports that is generated by the businesses reviewed, and assurance certifications are obtained. And then sustainability related current activities that we are doing, as I said, government is the major business in Nepal, and then that's why my personal recommendation is we should go with GRI. I'm not haven't actually gone through the report, that BRSR report that India has done a great job about. I have not actually, personally have not been have not studied that much, but still I think that's something that we could always rely on. And in previous occasions, our chairperson of SRSB, the previous chairperson of SRSB, Ms. Priti Salva, was actually always encouraging us to come to them if there's anything. I hope the situation is same here, even with Cipriaji coming in, and who seemed to be a very bright person. So our initiative the government of Nepal has taken is something that we are committed to. SDG, as all of us know, is the Sustainable Development Goal is to achieve peace and prosperity for people and planet. So we have to actually think about people and also a planet. But I think planet is more important, because reporting of planet related means reporting on environment is more important, because this is something which is quantifiable. If there's a mechanism in place where we could actually quantify, or you could account for the emissions that a business generates, then the target should be achieved. Their targets should be comparable. There's a fixed target. Whereas if we are talking about social can be based on regional. The situation in Nepal is different than the situation in India or maybe in Bangladesh. We are a country where ruled by a government which is a Communist Party of Nepal. So basically, our thinking process is different, you see. So labor issues are something which is considered very prominently. Maybe there are situations in Nepal where labor issues are more important than the FDIs that coming. So these are there is some judgmental considerations that come into play if we're talking about social. Whereas in case of environment, it's like the carbon emissions, and if there's a mechanism that one can actually account for it, one can record it, capture it, then it will give better results. And I think investors are more interested to actually know about it. But the thing is, as Savi rightly mentioned, if we go to level 2, maybe it's doable, but level 3 in our part of the country, I mean in Nepal, I think considering carbon emission or GHG emission, whatever, accounting for it for level 3 is very, very difficult, which I think. And our opportunity wise, you see, there's initiative of government. There's government as budget coding these days. Budget coding is as per SDGs. Government 16th plan, which is just rolled out yesterday, that it talks about SDGs and green economy. Gender responsive budget guideline is there in the country. Convention of elimination of all form of discrimination policies all there. Commitment to climate is something that government has Nepal government has done to the international community. At the initiative at the ICANN level, as I mentioned, there's this committee of Nepal Sustainability Reporting Standard Development Committee, in which we have actually tried to compile many regulators, experts who are experts who could account for GHG gas emissions, and then ones who have done PhDs and things like that in this, how to account for, etc. So that development committee is actually working on the guideline, and we presume we think and we are hopeful that we could roll it out in coming couple of months. And then but as I said, these are the standards I'm talking about. And then what are the sustainable reporting practices and which are prevailing in Nepal? As I said in the beginning, ESRM guideline is some guideline which our central bank has issued. There's unified directive for banking financial institutes issued by our central bank, which also talks about corporate governance and things like that. Security Exchange Board of Nepal as which is there, and I'm the director there, representing ICANN there. So it has also corporate governance directives and even green finance funding directive these days that listed companies have to actually report, and these are reported on quarterly basis, annual basis. So then there's very good reporting guideline which is coming out of Environmental Protection Act. It's called IEE, Environmental Impact Assessment, which is done, which are very stringent, which is based on GRI model, but the GRI framework. But the thing is, like, these EIAs and IEEs are carried out at the beginning of a project, and to get an approval. Once an approval is obtained from the Ministry of Forest and Environment, then it's stopped. So then no further reporting is made. Sometimes the media takes it up, but it's not, since it is not mandatorily required, it's only for the purposes of obtaining the licenses, which is there. As I mentioned, there are provisions in Companies Act, Insurance Act somewhere which talks about governance and also environment perspective at various conditions. And the challenges that we are facing here in Nepal is, as I tried to mention sometimes earlier also, it's there's no integrated sustainable reporting requirement as of now. So there are regulations which are coming out of different regulations out of different acts, and then that businesses are actually complying with that, and their reports are not standardized. That's why we are working on S1 and S2. Lack of awareness of sustainable business practices among businesses is something which is also a challenge that we face here. We had carried out SAFA and accounting and ICANN together has carried out a sustainability understanding survey, which was a project for SAFA Committee on Sustainable Reporting, and the results that we have actually compiled, and it was also discussed the other day in our meeting, which is that basically most of the participants have reported that their knowledge is not sufficient and their awareness is on a lower side. So that is also something that is a challenge. Though lately ICANN and have like on many occasions has actually carried out many webinars, seminars, and conferences, conventions, and sustainability is something that we are discussing a lot. But general understanding of our members and our stakeholders are that we are only talking broadly, and they want this insider, actually real life example that we are actually something that we are actually thinking about, and we need to roll it out. Resistance to change is something, and acceptance of sustainability principle is something which is also a challenge that I could see. Regulatory frameworks and availability of insurance, as Savisa also said, like level 3, getting information is something which will remain a big challenge, because data is not available, as in our case in Nepal. He mentioned that in Bangladesh there are coal-generated power plants. Electricity is something which is one of the GHG gas emissions, basically one of the major polluters. In Bangladesh, there are coal plants and other plants. As Savishab just mentioned, in Nepal, we have 100% water, 100% hydropower plants. So our energy is clean, but these are all based on ROR, runoff river, and PRR, peak runoff river. So peak runoff river, as you know, is where water is also stored for some time. So when water is stored, you have to society is impacted and forest area is impacted, whereas in ROR the impact is actually minimum. So it's a clean energy that we actually produce. We also export it to India, and we are trying to export it to Bangladesh. But there are, and since Nepal is a country where all the rivers are coming from the glaciers, so in winter months like 6 months of the year, the water flow just drops down. And then since all our energy is hydropower, we have to import from India. And then we don't know whether that the electricity that we are importing is coming out of the coal plant or from the nuclear plant or from hydroelectric power of India. But even in India's hydropower, most of the hydropower plants are like dam based. So there's GHG impact there. So getting information about level three information about carbon G2Z emission is something which is a challenge. But one of the things that we need to talk about here in our webinar today is the best practices or the good results. One of the good results that I always share whenever I'm allowed to actually talk is that Nepal is a country which has actually doubled its forest cover from 22% to around 44-45%, basically doubled in last couple of decades. So there are things that we have actually achieved, and then this community forest program of Nepal is one of the success stories of the world, which is actually followed by many. So we are able to increase our forest cover, but as I mentioned in the beginning, since we are like donor influence in our country is more, there's one national priority project which is actually there's a big highway which is being prepared, and the main contractor is given to our army, Nepal army, because our army is basically for development purposes. We cannot compete with the big neighbors that we have. So the head of the army was reporting only a couple of weeks ago in Parliament, saying that he had to actually wait for more than a year to get few trees cut because of the regulatory reasons. So what I'm trying to say is, and these stringent regulatory reasons are coming because of the donor funding, who actually are more insistent on sustainability, on environment than the development of the country. And we, as a country which economy is low, so we should be trying to get to a situation where there's a trade-off between the sustainability and our development, because we have to need there's development needs here in the country. And competent resources is also one of the big challenges that we see. Way forward, from our perspective in Nepal, way forward is we need to continue awareness and capacity enhancement among members, which even you in India are actually trying to do. And then continued industry preparedness is something that I think we have to do, because industry must be prepared. And in India, basically, as you just mentioned, that top 1,000 companies are mandatorily required to actually report. So we should also be applying the same thing for when S1 and S2 are rolled out. So we have to ensure that our industry or the top ones are actually prepared. So we have to continue creating awareness. Pronouncement of sustainability standard is something which we have to do, because unless we do it, people in Nepal basically, as unless it's already rolled out and there's a deadline which is coming up, and then only they will take it seriously. And then coordinated mechanism for enforcement of sustainability practices must be there. And finally, I would conclude by mentioning that we had this sustainability survey that we carried out with SAFA's Committee on Sustainability Reporting, and then there were a few questions. I'll just like to mention a few of them. How would you rate your awareness of sustainability issues and ESG principles? This was the question that we put across to our members here, and 69% of the people said moderate and 19% said low. And similarly, have you received any formal training? 87% said no. Despite many webinars and many events that we have carried out, 87% of people said they have no formal training. And the other question is, do your client organization actively measuring, working to reduce carbon footprint? 79% says no. Only 21% says yes. There's a project, donor-driven project, which is carbon financed, you see, and as per which 5 of the commercial banks have to report their total carbon emissions from their clients, from their advances that they have they have actually given. So that's a project which is funded. Based on that, there are few institutions who have done it lately, but still, and then they have done it, but overall compliance is on the low side. I think this is the only thing which I can say at this moment. I will hand it over back to the moderator. Thank you.
Thank you so much, sir, for giving us the key insights on the overview status of the sustainability reporting in the Nepal, as well as the frameworks that are in use, as well as the unique challenges that is being encountered, and the further developments that you're looking forward in the way forward. And this has really enhanced our understanding of the landscape of the sustainability reporting in Nepal. Thank you so much, sir.
Yeah.
Now I would like to invite CA Neeraj Mittalji to introduce our next speaker, CA Prabha Gupta.
Good afternoon again, everyone. Am I audible?
Yes, sir, you're audible.
Okay. Now I'm going to introduce Mr. Prakhar Gupta from India. Prakhar ji is a senior sustainability professional and leads the ESG advisory practice for Incorporation Global, a Singapore headquarter advisory and compliance firm. Prakhar ji is also a chartered accountant and MBA from the Indian School of Business. He is an ICI certified BRSR professional and GRI certified professional. Prakhar ji is also a special invitee member of Sustainability Reporting Standard Board of ICAI. He is currently working with 80 plus listed companies on ESG and sustainability. Prakhar sir, thank you, and we are honored to have you with us. Thank you, sir. Please welcome, and please over to you, sir.
Thank you for
welcome, Prakharji. Welcome,
thank you,
Anuj
sir. Yeah. Thank you for the quick and detailed introduction to office and hello everyone, including the president and vice president of SAFA and SRSB committee and ICI overall committees. Hello everyone for whoever is, different participants who have joined from different SAFA countries, and thanks for a very delightful session by Mr. Praveen ji and Sabir sir. Before I take over the floor. Office, can I share the screen if that is fine? I have a small PPT to present. Will that be okay?
Yes, sir, you can.
Yeah,
we have given you the host rights.
Yeah, let me just share the screen. Let me know if my screen is visible and I'm loud and clear in my voice.
Yes, sir, all perfect.
Great. So, as a part of the topic today, I will be majorly focusing on 4 aspects. I will start with talking on what is India's focus on sustainability right now, and during this course, I will also try and answer the questions Mr. Savitji has also sort of mentioned in his presentation, and then next is I will focus on what is the current regulatory and reporting format which India is following as of now, where we stand in terms of various reporting and regulatory aspects related to ESG, and then swiftly I will move on to cover the method of integration and the path of integration which India is following from integrated reporting perspective. Definitely within last couple of years, we have taken a great leap on both reporting and other regulatory structures, wherein the sustainability report has become the mainstream in our discussions on various forums, and I think there is a great amount of work which SRSB board has done in last 3 or 4 years down the line, and a lot of initiatives which were taken, which are coming on table now and which are becoming laws in years to come. So with this, I will just quickly start with the first part. In terms of the progress which what India has made, with respect to our net zero goal, it's not the first time we are talking. We have, as a country, we have taken a voluntary goal in 2009 initially, and then our target was to reduce our intensity by 2020. Our target was to reduce our emission intensity by 20 to 25%, as well as we had in 2005 as a level in 2005, and we successfully achieved that. We could reduce our intensity by 24% in 2020, and that's where in 2015, and post that, we signed the Paris Agreement and submitted our first national determined contribution goal, which is having 8 broad parameters. And glad to announce again that in August 22 we have mentioned we have already achieved 2 of that parameters and extended those parameters or extended our commitment. So we have successfully reduced our emission intensity to 30 to 35%. The target was to do it by 2030, but we have already achieved it, and we have increased the target to 45% by 2030 right now as we speak. Also, the target was to achieve 40% cumulative renewable electric power, which we have been renewed to 50% now. So currently India's target is to get a 45% reduction of emission intensity as the level of 2005, and then by 2030 that's the target which we want to achieve currently. And also we have a target of 50% reduction, 50% conversion to renewable energy, which we are sort of on the path to achieve that target as well. Third is we also have a target of build a carbon sink. So I think what Mr. Praveen was already talking, that Nepal is rich in forestry and hydro projects. India is also planning to build similar large carbon sinks with the capacity of 2.5 to 3 billion tons of CO2 absorption, and that's the target we have by 2030. We have also formally announced a net zero target as a country, so we have a target of 2070 which is being announced. Now that's the whole progress map on when we talk about the Paris Agreement. Talking on to our progress on SDGs, which is also we are a signatory to UN SDG goals, and currently we are ranked 112 on the SDG ranking, which is recently released in the recent rank, which is released in 2023 last year, and we have a SDG index score of 63.5%. We are sort of progressing, but not in a very aggressive manner as of now on this. So that's where we stand on UN SDG and Paris Agreement currently as we speak. Now said and done, I mean, moving on to the reporting part and where we stand on our reporting journey. I think in terms of regulations, we have hundreds of regulations active in different spaces already. I mean, we have detailed regulations on how environmental regulations should be followed, right from conducting environmental assessment when you start a new project to ensuring that the pollutions are under control, the dumpage is under control and all. So we have segregated regulations since long in the country. Even from social perspective, we have detailed labor laws defined in the countries. We have detailed human rights laws which are defined already in the country. On governance perspective also, I mean, Companies Act is in place since years now, and I mean, which was refreshed with the new act recently on, I mean, in 2014 we have replaced, I mean, we have come up with 2013 Act, which was sort of setting up this milestone on the governance perspective. So both, I mean, all on the 3 fronts, on ESG, we have a detailed regulation which is going since ages. But then what was missing was a consolidated view of how the company's performance is happening on these parameters, and on a consolidated basis, like you see a financial report, you could also want to see a non-financial performance of a company, majorly focusing on the impact which the company is creating on various aspects of environment, social, and governance parameters. So that is something which was sort of missing a couple of years back, and India took a journey in that matter. I mean, currently as we speak, there are a lot of things which have evolved since 2 to 3 years down the line. If you see, we have adopted several reporting measures right now, and also from a financing perspective, and from an investment perspective, also we have taken several of the measures in terms of building the capabilities and pushing the financial agencies to adopt sustainability and ensure that when they are funding a project, they would be conscious on what they are funding. So quickly, I will take you through these measures. For example, the first one, which is talked by most of the speakers before me who have spoken on the topic. So BRSR, or Business Responsibility and Sustainability Report, it is a mandatory compliance as we speak for top 1,000 listed companies. I will talk on this in detail in my subsequent slides, and I will also give you a glimpse of what this report today covers. But it's a very intensive report which is having detailed parameters divided on environment, social, and governance factors. It was voluntarily adopted in 2020, 2021, and 22, and then mandatorily adopted in 22-23 reporting financial year. And top 1,000 listed companies, both on 2 prominent markets in India, which is NSE and BSE. So all the listed companies which are in the rank of top 1,000 have to mandatorily publish this report, which means that the last year we have a detailed ESG report for top 1,000 companies already on live in the public domain, and which gives in detailed insight into their operations, how these companies are progressing on various factors on environment, social, and governance parameters. When this report was announced last year, a lot of concerns was raised last year with respect to how the data will be assured, what would be the reliability of this report, because a lot of data was coming in for the first time in public domain. So SEBI, which is the regulatory body in India, which is creating these regulations, they have come up with the further intensification of the reporting process. And this year, which is FY 23-24, even the assurances have become mandatory. So what India has taken is as a gradual approach of implementing assurances on these new reporting frameworks. And from, let's say, for example, from FY 23-24, top 150 companies today has a mandate of publishing this report along with a audit statement, which is a third-party audit statement. And this will gradually grow. So this will increase to next year. Already the announcement is for top 250 companies to go for audit, then eventually 500, and then FY 26-27, all 1,000 companies have to publish this report, which should be reasonably assured by a third party. Although the scope of assurance is limited, what government has done is that they have identified the indicators which are easily, or which can easily go for an audit, because there are a lot of qualitative data which is there in this report. So that segregation has been done, and a subset has been created which will go for audit. So that is again a very important activity, or an important step which is taken by government. The third very important step which has been taken in this step, and which some part of it was also talked by President SRSB when she started her speech on the topic, and she was mentioning about MSME and covering the small companies which are below 1,000 benchmark. So what government is now doing is they are asking the top 250 companies, large listed companies, to also report the performance of their value chain partners, which means not just the supply chain, but also the downstream partners as well, dealers, distributor, and all. So there's already a mandate that from next year there is a mandatory disclosure which will come in along with the BRSR report, wherein certain indicators has to be published for the value chain partners, which is a very big leap in the process. And what this is doing is it is pushing not just the large listed companies to adopt the ESG reporting, but it is also pushing now the smaller companies which are below 10,000 mark to start adopting these reporting parameters, because they are being pushed by their customers or their suppliers. And if they want to continue and remain in the business, they have to start adopting these in a gradual manner. So that's again a big move which has happened right now in the zone of this whole reporting exercise. Fourth point, which is again very unique to India, what India has done, and it was realized last year. I mean, globally there are several rating agencies which are active right now, and companies were sort of a bit puzzled with respect to how they will analyze or they will understand these ratings which are published by these rating agencies. So what India did last year was they adopted a mechanism, a formal compliance was adopted in India, which regulates how ESG rating will happen in India. So there is a formal procedure of what a ESG rating agency has to follow if they want to operate in India, and this applies to both Indian and international agencies. If they want to operate in India, they have to take this license and then follow the norms which are mentioned in the regulations, which is again a very remarkable stand. And what it also focuses on is bringing the Indianized version of rating. So I mean, most of the global agencies were rating Indian companies based on the Western parameters, but what these rating agencies have been directed now is they have to also follow the Indianized parameters, which is more related to the Indian environment and more related to the Indian investors at an overall level. So that is again a big move which is taken by the government last year. Apart from these, there are a couple of more important regulations which have flown in. One of them is extended producer responsibility, which is EPR, and which is right now pushing the manufacturers of plastic and e-waste to collect the produce. So basically, there is a mandate which says that, and in order to improve the circularity of plastic and e-waste, there is a mandate which has come in wherein all the brand owners of plastic packaging and the brand owners of the brands which are using plastic packaging, they have to sign on this regulation and give their targets to the government that how much collection of plastic they will do from the market. Same with e-waste, how much e-waste they will collect from the market. And there is a intense regulation which has come in which is forcing most of the companies to start collecting the e-waste and the plastic waste, recycle the same, and then reuse the recycled component in the production which they are doing, which is again a big move to improve the circularity on overall level. Lastly, on PAT, I mean, again, very small, although small initiative, but an important initiative which is pushing companies which are having large powerhouses, in-house power setups, to move from coal-based power sources to non-coal-based power sources, and they have to take targets. Again, they will get credits and they will incentivize and all. So all that process have been started at the local level to ensure that the local power plants which have been which are owned by companies or corporates, they start moving towards more renewable sources of energy, and they stop using coal in their, and they move away from using the coal, and they will get credits to it which they can sell to the companies which couldn't do that. So again, these are few of the parameters which have come on reporting. There is also a parallel focus which has come in on the financial world. I mean, how do you push from a investor perspective, because that is a very important area of push which government has tapped in, and they want to also bring in investor community into the loop and make them push these regulations. So the first is very important. I mean, from a mutual fund perspective, whichever mutual fund are tagged as ESG mutual fund in India, they have to follow regulation. They have to ensure that whenever they are investing money, they can invest only in the company which is publishing a BRSR. So a formal ESG report has to be published in before putting the money by these mutual funds. I'm just talking at a very high level of the compliance, but there are detailed nitty-gritties which are defined in the regulation. There's also a implemented concept of social stock exchanges come in India, wherein NGOs and non-profit organizations can list their social projects and get the funding in terms of donation through a formal channel of market on major markets like NSE and BSE. There is a formal channel which has been created wherein the improvement of transparency have been made for these NGOs to raise funds and donations in the tokenized manner. So again, a big move from a funding perspective, promoting the social impact. So that is again a big change which has come in. On regulation of green bonds, again, there is a formal regulation which is in place already for the green bonds. There is a formal regulation in place for renewable energy certificates, or RECs as we speak. There is very recently India's central bank, which is a regulatory body of the banking system, RBI, they have come up with a formal draft disclosure which is pushing the financial entities to adopt the climate related financial risks, which is nothing but the S2 currently. So adoption of S2 and the TCFD disclosures have come in the streamline for the first time, the formal streamline for the first time with this draft. And now RBI is looking for recommendations on this draft right now, and very soon they will come up with a formal policy and a regulation which will push the banking industry to adopt the TCFD and the S2 IFRS S2 guideline in a formal manner. So these are few of the examples wherein you see a lot of pushes coming in, and most of these are very recent. Let's say within 2 or 3 years, maximum 4 years down the line, these regulations have cropped up, and which shows the intensity how the country is moving right now towards the space of towards the ESG, and the adoption is very in the mainstream zone right now. Very quickly on how the reporting has progressed. So India, it is not the first time that we are reporting on ESG parameters. Since 2009, when India adopted national voluntary guideline, there's something known as voluntary guideline on CSR initiatives. India has adopted in 2009. Post that, there is a report which is known as Business Responsibility Report, which was mandated in 2012 for 100 companies, and then eventually it was made mandatory for 1,000 companies as the year passed. What majorly changed was, as I said, 2015, the Paris Agreement and the UN SDG came in, and then that's where the intensity increased even within India, and they have replaced the voluntary guideline with a mandatory guideline, which is National Guideline on Responsible Business Conduct, and there is a nationwide guideline how we emphasize our businesses to be conducted on a sustainable manner. And following that guideline, BRSR was launched in 2021, which was first time formally the BRSR was replaced with BRSR guideline, and which is a detailed report. And in last year, as I said, 2023, the guideline become more intensive, wherein the format was enhanced with some new indicators, and then the audit was made mandatory, and the value chain reporting was made mandatory. What was also introduced. So that's where the progress is in terms of how we have grown till now on various parameters. Quickly, just giving you a perspective of how the BRSR looks like. It focuses on materiality. So the focus starts from identifying what is material to your business. There's a section wherein you have to report what is the material areas on environment and social parameters. There is a dedicated section wherein you have to report the policy matters, that what all different policies you have right now and whether these policies are approved by board, who is the owner of the policy within the organization. There is a formal disclosure on ESG governance structure, that who is the owner of sustainability within the company, which committee owns the whole process of implementation, which if the board is owning, which director is responsible for implementing this. That the whole report has more than 100 data points summarized into the report, and most of these data is 2 years, have been asked for 2 years. So it's a very detailed guideline, as I said. A lot of data has been asked, specific data points have been asked in each of the areas. It is also right now, after the amendment, it is also integrating a lot of financial data, in which I will talk in the subsequent slide, that how it is it has started transitioning from a non-financial report to a integrated financial non-financial indicator report, and comparability has also been increased. So the whole idea is, how do you compare one company's report with another company's report? The focus is also built in that parameter as well. So very quickly, if you see the map which I've tried to present, the whole report is divided into 9 different set of principles, and each principle focuses on a specific area. For example, principle 1 focuses on corporate governance, board diversity, policy grievances methods, and anti-corruption. Similarly, there are 9 different areas in which the whole report is divided, and each area focuses on one or the other principle. So that's how the report is currently structured. Just give me a minute. Yeah, that's how the report is currently structured. If you see, there is a detailed focus on how the employee well-being is happening, employee well-being, diversity, inclusion, L&D, career reviews, how the reviews are happening. There is a specific focus on how do you identify a stakeholder, which are your important stakeholders, how do you communicate with your stakeholder, is one of the areas which is mentioned in the report. There is a specific dedicated area on human rights section. So how much minimum wage, what minimum wage you pay to your employees, what is the median salary currently at different levels, to your board, to your different set of employees, workers, what are the different median salary and how it looks like, how it deviates from one class to another. How do you cover your vendors in terms of harassment complaints and all? What is the grievance model which is there in place? There is a dedicated section on environment which covers emission, energy, water waste in detailed manner. So you have to disclose your emission, which is scope 1, 2, 3 emission. You have to disclose your water consumption at various levels, waste consumption at various levels. And then policy advocacy, that how are you ensuring the anti-competitive related laws? How are you working with the government to create better for the whole industry and not for just the company? What are you doing for the community and what are you doing for the customer? So there are dedicated focus areas which are there in the report. Coming on to the next aspect very quickly on how the integration is happening on the report. So currently, if you see various, on a broader level, there is a slight deviation on how a ESG report works and how your conventional financial reporting works. Mainly the financial reporting are structured on the control methodologies, but the ESG report is structured on influential methodology. So your reporting boundary at time might vary when you do consolidation. So that is again an area of sort of deviation which comes in when you try to integrate both the reports. Also, from a qualitative and quantitative perspective, most of the financial reports are largely quantitative in nature, but if you see ESG reports, there are also qualitative data which is built in, which is again a differentiation. And lastly, very important, from an historical versus forward-looking perspective, most of the disclosures, if you see from a ESG perspective, these are forward-looking, that what is your target, where are you right now on the target, and what are your targets and how you want to improve in the longer goal, longer run. What is your long-term vision of sustainability is the focus of a ESG report. That is also a bit of deviation when you see from a financial report. But said and done, India has already taken a leap. As I said, what India has done last year is they have come up with something which is known as BRSR Core, or a subset of the BRSR, wherein the whole idea is to build the audit capability. So how do you audit these numbers? And these are very important numbers which have been selected, so that this can be validated with your books today and the backup documents which are maintained today. So there are parameters which have been picked in various places. For example, environment, there was greenhouse gas, water footprint, energy footprint, circularity, waste management. So there is an audit procedure which is out for these 4 areas specifically. What data you will check, what you will audit, how you will audit, what are the financial numbers which you will check while doing that audit. Similarly, on social parameters, how do you check the parameters on employee well-being and safety, gender diversity, overall inclusion, development. Some of these I will cover in detail in the next slide. Fairness and engagement with customers and supply, how fair you are and what numbers can be validated. Openness of business, how much amount of work you are doing through a dealer versus openness, for how much openness is there, how much monopolistic you are in terms of your dealing, or how much competitive you are in your dealing is the focus of these areas which were handpicked and put for assurance, so that it helps the larger stakeholder community to build their decision on these data points. Now, there are certain examples which I've tried to cover, like for example, greenhouse gas footprint. So there is a linkage which has been built by asking, I mean, what you can do is you can check your assets. I mean, what is the source of emission, which comes from your asset registers mainly, and then there is a consumption data which can go for an audit, which is coming out from these assets. What is the consumption of raw materials or spare parts which have been, or spares which have been consumed in these cost centers, or the location of these assets, and then validation of this calculation. In terms of comparability, what the report does is it also asks for intensity. So if you see the reports which have been published by India, they give you intensity numbers. Like for example, what is the per turnover intensity of emission of a given company with respect to turnover. So per rupee turnover, per USD turnover, both numbers are available in the report right now. Similarly, on employee well-being, they have asked to publish the number on how much spending, percentage of spending you are doing for employee well-being versus your revenue. So if your revenue is 100 out of 100 rupees, how much you are spending for your employee well-being specifically? That's the question which has been asked. And again, this is a comparable number because it is percentage of revenue, which can directly be compared with different sizes and different companies. Same with gender diversity, for example. They've asked for how much female percentage wages is paid to female employees specifically. So out of your total wages, how much is paid to your female employees? And then diversity rates can be directly compared. Even this percentage of wages can be compared. From an inclusion development perspective, they've asked the numbers that how much of your business is being with MSME or smaller business houses. Out of your total percentage of purchases, how much of the purchase have come from MSME houses, how much of jobs you have created in various sectors. So for example, how much wages you are paying in a rural area versus an urban area versus a metropolitan area. And again, these data are comparable because you get a direct comparison from your total purchase or total wage. So that's a quick glance on how the BRSR is already building the capability of from and helping the reporting to move from a non-integrated version to an integrated version. Moving on to the challenges very quickly. I mean, it was only the second year, and there was a lot of challenges which are being faced by the industry right now. I'm working with several companies in this domain, and even in different parts of the world. There are common challenges which have been faced, and some of them were also talked by speakers who spoke before me. I mean, first is voluntary and inconsistent reporting ecosystem. So if you compare this whole thing with financial ecosystems today, everything is streamlined. You get one ERP where you can draw all the data from, but this is very sort of haphazard right now. The data is flowing from various users. You get data from sites, you get data from HO, you get data from various departments to compile these reports, and very difficult to maintain the consistency of data. So that is biggest concern today, wherein a lot of tech companies are evolving, a lot of methodologies are evolving right now, which is focusing specifically to resolve this concern as a matter. Second is a lot of acceleration which has come in regulation. If you see, I mean, the amount of regulatory push which has come in very small time, companies are struggling to get to that matter. I mean, even lack of resources is a bigger problem. You'll get very less resources right now, which actually understand the overall concept of what reporting has to be made, and that's a difficulty which is being faced by an overall industry. Various novel data streams which are never been talked of. I mean, if you see the emission footprint, and for most of the companies, although manufacturing companies were aware of what do you mean by emission, but for a service company it is very new. I mean, they don't understand what the emission is all about. They don't understand from where to get the water consumption data on ground. So there were various novel data stream which has flowed in, and which has created difficulties in the ecosystem at the larger level. From an immaturity perspective, most of this data is non-digitized right now. So everything is out of system. Very limited data you will find within the systems right now. And from a data perspective also, there are challenges. There are inconsistency with respect to unit of measurements. For example, if you see energy bills, every municipality or every even states in countries also, that the unit of measurement of electricity consumption might vary from region to region. So the inconsistencies are there in terms of even the unit of measurements which is followed, and which creates difficulty when you start compiling the information. So these are some of the challenges which are growing in the space. And just last on the last part which I was wanting to cover, which is on the reporting, I mean, opportunities which is growing for us as a professionals. I think all the fraternity of accounting fraternity. There are a lot of opportunities which are growing in. What I've tried to do is I've built a comparison between the subjects which we taught in our regular streams and the areas which we operate in our regular streams, and how the new areas are evolving on these streams on various matters. Like, for example, if you see financial accounting and reporting, a lot of non-financial reportings are growing right now. Specifically, carbon accounting is on the rise. If you see EU today, they are asking the exporters, and it applies to all the SAFA countries equally. A lot of export is happening in EU right now, and they are asking you the question right now on the carbon footprint of a given product, which is nothing but how do you account for the carbon accounting or carbon footprinting of a given product. So it's on the rise right now as we speak. Even the target monitoring. So you are known to monitor the financial targets, but now you have to also start monitoring the non-financial targets in this field. Cost management perspective, I mean, life cycle assessment is something which is a new thing which has started evolving. What is your life cycle of your product, when right from purchase of raw material to sourcing to even, I mean, end of life? So once, for example, if you see a plastic bottle, a water bottle of any brand, if you see what is the life cycle of that bottle, right from raw material which they buy, which is, let's say, the PP granulars, to filling the water, and then once it get disposed after drinking to that location. So everything is calculated in that process, which is nothing but your costing of from a carbon perspective. So what is the carbon cost of a product which you are using? The concept of circularity is on the move. So optimization is something which we are all familiar with cost accounting perspective, but now the circularity is the new thing which has come in, wherein you're trying to optimize your resource consumption from a larger level. So not just within the premise consumption, but at the environmental level, how do you optimize your resource consumption and ensuring that more and more circularity you bring in into the process, and most things are getting recycled rather than going into the dump. So again, a new area which is evolving. Taxation, I mean, you'll see a lot of carbon taxation coming in, subsidies, tax holidays, which are going in this direction. Audit and assurance, a big area which is growing. How do you audit all these things? Do the assurance of these areas. You have report assurances, various kinds of report which is being published. You have social audits which needs to be done the assurance of. And there are different versions and forms of assurance which is growing in this domain. From a governance perspective, corporate governance, the whole concept of ESG governance is growing. That how do you ensure that climate risk is being talked at the highest possible board level? What is the information flow of the performance which is happening on various sites, locations? How do board get the information? How do you comply with the emerging laws is something which is growing at the corporate governance level. From a financial management perspective, FM, which is how the new ways of financing, which I already talked in the last slides. There's a concept of green climate bonds which are growing. There's a concept of sustainability linked loan which is growing. So in several parts of the countries, you will see banks are coming with initiatives wherein they are giving you the loans at a lower rate if you achieve a sustainable target. So if you take a project to them that I want to install a renewable which will generate X amount of power in a given long run, and if you achieve the target, bank will reduce your cost of credits in that matter. So these types of loans are on the rise. Stock exchange I already talked about. From a risk management perspective, materiality assessment, the president, I mean the vice president of the ICI was speaking about this when he started his conversation. So the whole concept of materiality assessment, which is parallel to your risk assessment, when you see in your financial, you have to conduct a materiality assessment in non-financial space. Internal controls, how do you do internal controls of all these calculations which are happening on ground? What do you do internal audits? And lastly, on strategic management, I mean, how do you create a strategy, a roadmap, which is a long run, 2070, 2040, 2030, today world is talking. So if you see several companies, they're taking goals on 2030 or 2040 level, that what would be their emission down the line, and after 2040, what will be their emission? What are their targets, and how do we achieve that target? So that is something strategy management which is being talked about. So this is a perspective which is trying to set you all in terms of what all opportunities which are growing in this space. And I think to conclude as my last slide, and I will open for Q&A and pass it on to the team, to the office back. So I think there are three things which is very important. I think learning, most of us have to improve our learning speed. I mean, I think one of the speakers was talking about the rate of awareness which is low right now, although a lot of sessions are happening. I think the curiosity is very important, and there are a lot of new areas which are growing in this space, and a lot of learning is required. I think that is one area. Collaboration, networking, I think this is a great forum to talk on this. It's a cross-country collaboration which is happening, and if the apart from this also, there are a lot of cross-team collaborations which are required. You might have to deploy an environmental expert when you are doing any of these assignments. You might have to bring in a specific social expert, like someone which is great in HR, conducting trainings in HR. So a lot of collaboration opportunities are there, and it has to be an open-minded sort of networking structuring which you have to create. And lastly, on participate, a lot of opportunities are coming in various boards across the countries, and the members can participate and be active in these areas, and uh, on the ground start learning and also do research and get back to the society. So that's the broad 3-point conclusion which I wanted to do. Thank you everyone for your patience listening, and I hope I could finish on time. So over to you, office.
Thank you so much, sir, for giving us the key insights on the India's regulatory landscape in India, specifically about the sustainability reporting and financing, telling us about the BRSR framework, how it is linking the non-financial with the financial data, the complexities and the challenges that we are facing, the growing opportunities in the domain of sustainability reporting in India. Thank you so much.
Now, Professor, we have shared the questions from the participants in the chat box. We would request you to please answer these questions.
So the first question I could see is, how can organizations ensure the reliability and accuracy of their sustainability data? So one of the point I was talking is that it is a challenge as of now as we speak, because there were multiple layers of data which is being created, and flow of data is not constant. You will not get a common stream of system which will give you all the data, and even the level wherein, when I say level, some data is centrally collected, some data is decentrally collected. It is a challenge as we speak, but there are a lot of solutions which are available in the market, right from in-house development. So for example, one of the data which you have to collect is how much energy consumption which is happening. So we can start capturing that on the source. So when you're doing the financial bookings of that data, at the same time you can also capture the consumption of that material, which can help you to start creating the reliability of the data. That is from a internal audit perspective. If you see from an external audit perspective, there are a lot of cues which are hidden in your financial reporting today, wherein which can help you to identify whether that data is reliable or not. You can draw comparabilities from last year to this year. If there is a gradual rise which has happened from, let's say, on employee count, there's a gradual rise of employee count which has happened. You can question why this is on ground. Is there a new office which has been opened? If there is a drastic difference of emission which has come in, you can go on detail and understand which fuel is creating this deviation in the details of the data, and then understand that what is the deviation which is being crossed, right? What is the source of the deviation? So I think the sources are available into the system. It's only that we have to understand what source you have to pick in and then validate. Next question: what are the emerging trends in sustainability reporting that should be aware of? I think the most emerging thing is IFRS as we speak. So IFRS has come up with S1 and S2 guidelines recently, and if you see globally, there are a lot of consolidation which is happening. So unlike financials, I always draw this example. So if you see financial reporting today, you have IFRS in globally, you have Indias in India, for example, which is it's a structured way of reporting. Everyone has to follow. This example is missing right now in the sustainability space. Although India, for example, has taken a leap, and BRSR is mandatory for top 1,000 listed companies, but still there are variations. Like you have GRIs globally, which can be a different set of reporting standards which can be followed. You have TCFD, Task Force on Climate-Related Disclosure. There you have European standards which talks a different language. Although numbers and calculations might be close to same, but then qualitative indicators vary drastically from report to report. So that's where the catch is. But what is relevant right now is IFRS and GRI. These are the two prominent factors. Europe is also one of the areas which can be seen through. And lastly, the TCFD, which is merged with S1 and S2. I think these are the three frameworks which should be adopted at the earliest to start building your capabilities. How can sustainability reporting be used as a tool for achieving long-term business goals? Again, I mean, if you see the questions which have been asked, there are 4 levels of questions which have been asked in most of the sustainability report. I mean, guidelines of sustainability report. The first level is, which is your matter of report? What are you trying to report? Which is your battle? What is your battle? How do you pick your battle? That is somewhere the materiality assessment comes in, which helps you to define which area is important for you as an industry. Let's take an example of banking finance as an industry, BFSI. For them, probably more than emission, data privacy is more relevant. If you see manufacturing as an example, which is manufacturing a very competitive product, for them, data privacy might not be that relevant. but emission could be very relevant. So what is your battle right now? What is the most impacting factor which as a company which is the biggest risk for your company needs to be identified first. Once you identify that, you have to do 4 levels of reporting. First is what is the governance layer. So which policy drives that matter, which board or board committee or committee oversees that matter. That is the first thing. Second thing is which numbers are you monitoring when you define emission, for example. What are the numbers you monitoring? Let's say you are monitoring scope 1, scope 2, scope 3 emission. These are the numbers you are monitoring, and you should know which numbers are you monitoring. That is the second thing. Third is what are your targets, where you stand today, and what are the targets you want to achieve in the long run. That is the third thing. And lastly, what is your due diligence process? How do you ensure whatever you are collecting as a data is correct on ground, and whatever you are reporting in transparent and fair. So these are the 4 layers of factors which has to be followed when you are thinking from a long-term goal, business goal perspective. Because once you identify a risk, you will match it with your actual financial risk. I mean, it will be very easy for you to match it with a financial risk. For example, if data breach happens in a financial BFSI sector, you can tag it with a number, how much loss that that will bring to that business. Similarly, if environmental pollutant is released from a factory, you can build a number on the top of it. What will be the impact of that effluent release, which could drastically create havoc across that society. So that is where you will have to pick your battle and then do the disclosure. I hope I have answered all the questions.
Yes, sir. One more question which we got from Paradenia location is that how to get a job in sustainability areas as we never see the direct opportunity so far. Two questions from Paradenia in Jodhpur, Rajasthan.
So great. I'm also from Jodhpur, Rajasthan, by the way. So happy to hear a question from Jodhpur, Rajasthan. But I think the first and foremost is we have to start building the capabilities, because if you see from overall, we are good at governance and we are good at social, but definitely environment perspective, we have to start learning how this calculations happen. That is first thing. And second is, I mean, there are a lot of opportunities. If you see LinkedIn, we follow LinkedIn, a lot of job postings are happening on a regular basis, which are dedicated to sustainability and ESG. So you'll find jobs like sustainability officers, you'll find jobs like uh, environment heads, you'll find jobs like EHS heads, which are technical plus non-technical profiles. So I mean, I think we have to pick the battle based on what is the JD, and then I don't have a very specific answer to this because it's a field which is itself is growing right now, and very specific job roles are available both for technical and non-technical domains. So I mean, I think the first part is to summarize, learn, and then second part is to explore be the part of committees like these. I mean, I think it's a very good forum to be the part of and start participating in a lot of initiatives which the boards are taking.
Thank you, sir. Thanks a lot. Now we will thank you, sir. Thanks for your enlightening session and address the questions of the participants. Now moving on further, we just request C. Ashish Sachdevaji to just deliver the vote of thanks, sir.
Thank you, madam. Thank you, all the speakers, all the guests, and everyone who was present. And special thanks to CA Ranjit Kumar Agrawalji, who is the President, ICAI, CA Charanjot Singh Nandaji, who is Vice President, ICAI, Mr. Kishana Kurupu, President, SAFA, Mr. Ashwat Yusuf Tola, Vice President, SAFA, CA Sri Priya Kumarji, Chairperson, SRSB, ICAI, CA Dr. Anuj Goyalji, Vice Chairperson, SRSB, ICAI, Mr. Shabir Ahmed, FCA, Council Member, ICAB, Bangladesh, CA Prabeen Kumar Jhaji, Vice President, ICA Nepal, CA Prakhar Gupta, and we were listening to Sir. Thank you so much for an enlightening session, Sir, who is the CA from India. I would also like to thank everyone who helped make this session, this webinar, a great success. Thank to all the speakers once again for sharing their knowledge, and this domain of sustainability, as we all know, that the 3 P's. First, it was profit. Profit was very important. Now, people and planet, they are becoming equally important, and that is how we are going to grow in this area. And India is already taking a leap in it, as we have already seen. Thank you so much, and a special thanks to the organizing committee, the organizing team, and the SRSB board of ICI for arranging this webinar to enlighten all of us throughout. And it is not a a national event. It is a global webinar. We have been joined by participants across the globe and specifically the South Asian countries. Thank you so much. Let's keep the lessons we have learned today in our minds and apply the sustainability roles. Look forward in working in this area, this new growing domain. Thank you so much. Thank you. Have a great day. Thanks.
Thank you. Thank you.
Thank you, everyone. Look forward for the future webinars. Thank you. Yeah.
Recording stopped.